We're watching shares of Toromont today after its power systems business confirmed orders for around $1 billion. It hit an intraday record as a result today. It's the top performing stock on the TSX on this Thursday. Here to talk about that and more is Maxim Sytchev, who is the Industrial Products Managing Director at National Bank Financial. Maxim, thanks for being here.
My pleasure.
Maxim, take me through this. That $1 billion too, is that what you were expecting to see and investors were looking at today, or was it, more or less?
No, it's much bigger. If you look at the company's backlog before the announcement, it was 1.7 billion. So we're talking about the incrementality, which is quite large. And if you're thinking about sort of try to contextualize these things, it's very hard in Canada to play directly from a thematical perspective onto hyperscalers capex. And AVL, through their division, what they enable basically is it's a structure to protect gensets for primary and backup power for data centers, which is a very unique proposition. There's only 4 or 5 players in the space. And clearly the pace of spending and acceleration in the space is much stronger than expected. If you actually go literally 12 months ago, only 3% of company's top line was driven by this division, AVL. Right now, it's closer to 10, and I would not be surprised if we're going to be exiting 2027 north of 15% of revenue.
Wow, yeah, it's quite the rise too. It's getting upgrades all over the place from Raymond James, I think, and beyond today as a result of this. Give us a sense, though. What about inflation? What about labor, supply chain pressures? Is that going to impact margins on these orders?
No, highly unlikely. Actually, if you look, it's a very good question. The margin profile for this type of work is actually higher relative to the sort of the standalone legacy business. And clearly, we don't think it's going to sort of persist in perpetuity, because at some point the hyperscaler investments into capex will start to plateau. But nevertheless, obviously, it was very challenging to attract labor during the pandemic. We're over that hump. But obviously getting, the materials, labor, all the mechanical, electrical stuff, it's a big proposition, especially as all of these structures will have to be delivered by the end of 2027. But at the same time, that's also what management gets paid for. And if you look at the track record of Toromont, it is one of the best in the business, if not the best. So we certainly have a high level of confidence that they're going to be able to deliver on this massive increase in backlog.
Yeah, and again, too, for you're rating it an outperform. Are those you outlined some of the reasons too? Can they keep this going? Is it still a buy right now, or at this point for you?
100%. If you look at the hyperscaler capex in 2024, it was roughly $250 billion US. This year, consensus is around $750 billion. And we could potentially going above $1 trillion. And obviously, if you look right now, you have like OpenAI, which is, rumored to go public, filed already the documentation, Anthropic, et cetera. So the flood of capital will still continue. The other thing I think it's critical to mention from an investor and positioning perspective when it comes to the Toromont's investment thesis is that the core business, which is still 85% plus, is still doing extremely well. If actually you look at the latest quarter, used equipment was up 20% year on year. Rentals was up, north of 10%. So the core business has continued to do extremely well. The company's continued to, build its presence, obviously in the U.S. through AVL, but Canada is very much on an up and up. If you look at nation building projects, transit, gold is at a very good place right now. So there is actually a lot of base, which continues to build in Canada. And obviously, U.S. is providing a massive kicker right now, which I don't think anybody would have expected when Toromont's management team bought AVL in late January 2025.
Yeah, it feels like it really is playing a pivotal role, isn't it, right now in Toromont?
Yeah, absolutely. It's as I mentioned, when the AVL was acquired, revenue contribution was literally 2%. We think by the end of 2027, it's going to be north of 15%. And our blue sky scenario assumes that we could be generating north of 20% of revenue at some point from AVL on a prospective basis. But again, critically is that the base of the business, the Caterpillar truck that you see in Canada, which Toromont distributes, and obviously their Battlefield store continues to do extremely well as we speak. And yes, valuations have expanded for the space, because it's also, let's not forget, this is a safe from AI space bucket as well. But Toromont is trading at 26 times PE. Caterpillar is trading at 35 times PE. So obviously investors are positioned for further acceleration in earnings momentum for the entire cohort.
Yeah, I know you like it a lot, clearly. There have been some concerns about uneven cash generation, right? Still being susceptible to and some exposure to the cyclical construction and mining demand. But, for you, those aren't super big concerns for you?
Listen, if you look at the nation building narrative in Canada, I mean, it's structurally different. Last week, we hosted a Western National Bank of Capital Markets in Vancouver. And, the sense I'm getting from most corporates is that Canada is back and Canada is building. So in that type of backdrop, whether it's, transit, bridges, defense, critical minerals, all of these things will support the business in the foreseeable future. So we actually don't see any type of risk from that perspective when it comes to the outlook for Toromont and its peers, to be honest.
Maxim Sytchev, Industrial Products Managing Director at National Bank Financial. Appreciate your time today, sir. Thanks so much for this.